Markets just posted their strongest month since April 2020, yet uncertainty hasn't disappeared. Hello, I'm Eric Pettway, Chief Investment Officer at Journey Advisor Group, and welcome to CIO Corner. Last week, equity markets moved higher with the S&P 500 up 1% and the NASDAQ 100 up 1.6%. The S&P 500 finished April up 10.5%, marking its best monthly gain in nearly 6 years. Markets are now at all-time highs, and the S&P 500 is up 6% so far in 2026. International markets underperformed U.S. equities last week, though they continue to remain ahead for the year overall. Beneath the headlines, market participation has stayed relatively broad. At the same time, investors are navigating elevated uncertainty. Disruptions along key global energy shipping routes have contributed to higher oil prices, with the national average gas price now around $4.43 per gallon, according to AAA. Financial markets are looking for greater stability and clarity, and sustaining current market levels will likely depend on how these developments evolve in the weeks ahead. On a more positive note, corporate earnings continue to provide meaningful support for markets. S&P 500 earnings for the first quarter of 2026 are currently up 27.1% year over year, exceeding expectations. If confirmed, this would mark the fastest growing earnings growth since the fourth quarter of 2021, according to FactSet. Strong fundamentals have been doing much of the heavy lifting beneath equity prices. Now it's time for Chart of the Week. We've received many questions recently about the latest Federal Reserve decision and what it means for markets. Expectations have shifted as higher energy prices have added pressure to inflation, while some areas of the labor market have shown signs of softening. At its April meeting, policymakers held short-term interest rates steady in a range of 3.5% to 3.75%. However, there was notable disagreement around the outlook. Some members emphasized concern about inflation remaining elevated, while others focused on signs of cooling economic momentum. As a result, market expectations remain divided, with investors weighing multiple possible paths for interest rates later this year. The chart we're sharing here helps place today's interest rate environment in historical context. While short-term policy decisions and headlines can create noise and volatility, investors who stay focused on long-term fundamentals tend to avoid making major portfolio changes based on any single meeting. We hope this week's CIO Corner and Chart of the Week are helpful as markets navigate in a certain environment. If you find Journey Advisor Group's content useful, follow us on LinkedIn or your preferred social media channel. And if you have questions or would like to review your portfolio, reach out to your JAG team to discuss your goals and stay on track. As always, remain calm, stay focused, and most importantly, stay the course.